In China, a silent crisis is unfolding, one that threatens to reshape not just the nation's economy, but the lives of millions. For decades, the country's booming real estate market was a symbol of progress, an ever-growing engine of wealth that seemed unstoppable. Apartments, houses, and entire cities sprang up at an unprecedented pace, fueled by a belief that property prices could only go in one direction, up. But today, that illusion is crumbling. Homeowners who once saw their properties as the ultimate investment are now staring at financial ruin. They took out massive loans, convinced that the value of their homes would rise indefinitely. Now, their dreams have turned to nightmares. Property values are plummeting, mortgage debts remain unchanged, and banks are refusing to take back foreclosed homes. It's a financial disaster unlike any China has seen before. Imagine this. A family spends years saving up to buy their first apartment, investing in what they believe is their ticket to financial security. They take out a mortgage, stretching their finances thin, confident that their home will appreciate in value. But suddenly, the housing market collapses. Their apartment, once valued at 3.4 million yuan, is now worth only 1.7 million. Yet, they are still expected to pay back the full mortgage, twice what their home is actually worth. Stuck in a downward spiral, they are left with a terrible choice. Continue paying for a home that is losing value every day, or stop making payments and risk losing everything. This crisis isn't just about individuals. It's a systemic collapse. Banks are overwhelmed, developers are going bankrupt, and the government is scrambling to contain the damage. The entire economy, once propped up by real estate, is now on the edge of an abyss. How did this happen? How did China's housing market, once the envy of the world, become a financial time bomb? But before we dive into today's topic, please hit that subscribe button to help us reach our goal of 1,000 subscribers. Your support means the world to us, and it's greatly appreciated. To understand the collapse, we need to go back to the roots of China's real estate boom. For decades, homeownership was considered the safest and most reliable way to build wealth. Unlike stocks or other investments, real estate seemed like a guarantee, something tangible, something that would always appreciate in value. Families poured their life savings into buying homes, often purchasing multiple properties as a way to secure their financial future. The government encouraged this growth. Real estate development became one of the primary drivers of China's economic expansion. Cities expanded at a breathtaking pace, with entire districts constructed seemingly overnight. Developers borrowed enormous sums of money to build more apartments, while banks eagerly handed out loans to homebuyers. The demand was insatiable, and prices soared year after year. But underneath this rapid expansion, cracks were forming. Much of the housing boom was fueled by speculation, not actual demand. Investors bought apartments not to live in them, but to hold on to them as assets, waiting for prices to rise even further. Many of these properties sat empty, their only purpose being to generate profit through appreciation. The system worked as long as prices continued to rise. But the moment the market slowed, everything began to unravel. By 2021, the cracks had turned into a full-blown crisis. Developers, many of whom had borrowed heavily to fund their projects, suddenly found themselves unable to pay their debts. Some of the largest real estate companies in China, including Evergrande, collapsed under the weight of their liabilities. Construction projects were halted midway, leaving thousands of homebuyers stranded, having already paid for apartments that would never be completed. The panic spread quickly. As news of failing developers and unfinished projects dominated headlines, confidence in the real estate market plummeted. People who had once seen property as the safest investment began to realize that their homes might not be worth what they had paid. Prices started to drop. And once that decline began, it became impossible to stop. As home values plunged, a terrifying reality set in for millions of Chinese homeowners. Their mortgages, taken out at the height of the market, remained unchanged. They were locked into loans based on prices that no longer existed. A homeowner who bought an apartment for 3 million yuan was now living in a property worth half that amount, but the bank still demanded full repayment. Faced with this situation, many homeowners made a desperate choice. They simply stopped paying. The logic was cruelly simple. If their home was no longer an investment but a financial burden, why continue to throw money at it? Mortgage defaults surged across the country, creating a ripple effect that threatened to bring down the entire banking system. In most countries, when a homeowner defaults, the bank forecloses, repossesses the property, and sells it to recover the loan. But in China, the situation was far more complicated. Banks were already drowning in unsold and foreclosed properties. There were simply too many houses and not enough buyers. If they repossessed millions of homes, they would flood the market with even more supply, causing prices to crash further. Instead of foreclosing, banks took an unusual approach. Some began offering struggling homeowners massive discounts on their mortgage payments, allowing them to pay only a fraction of what they owed in the hopes of preventing a total collapse. Others delayed foreclosures entirely, hoping that by postponing the crisis, the market might somehow recover. But these were not solutions. They were merely delaying the inevitable. The scale of the problem is staggering. In 2017, only 9,000 properties were auctioned due to mortgage defaults. By 2019, that number had exploded to 500,000. And by 2023, it had reached over 3.5 million. With so many properties flooding the market, home values continued to decline, further discouraging homeowners from making payments. Banks, desperate to stop the bleeding, started employing aggressive debt collection tactics. They hired thousands of collection agents, incentivizing them with high commissions to recover unpaid loans. Some homeowners found themselves harassed daily, threatened with legal action, or pressured into signing repayment plans they could barely afford. At the same time, China's job market was shrinking. Unemployment, especially among young people, was rising, making it even harder for homeowners to keep up with their mortgage payments. Many who had taken on loans when the economy was strong were now struggling to find work, leaving them with no choice but to default. The Chinese government, recognizing the severity of the crisis, stepped in with a series of emergency measures. They injected hundreds of billions of yuan into the financial system, hoping to stabilize banks and prevent a full-scale collapse. They eased mortgage regulations, making it easier for people to refinance their loans. Some local governments even started buying up unsold apartments to prevent prices from crashing further. But despite these efforts, the fundamental problem remains. The housing market was built on an unsustainable cycle of speculation and debt. Now that the cycle has broken, no amount of intervention can restore the confidence that once drove it. Homeowners are still refusing to pay their mortgages, developers are still struggling to finish their projects, and banks are still burdened with a mountain of bad debt. China's housing crisis is not just about real estate. It's a turning point for the country's entire economic future. For decades, the property sector was the backbone of China's growth, fueling industries, creating jobs, and driving consumer spending. Now, that engine is breaking down, and no one knows what will replace it. The government will continue to fight to keep the market afloat, but the damage has already been done. Confidence has been shattered, and it will take years, if not decades, for China's real estate sector to recover. In the meantime, millions of homeowners remain trapped, their financial futures uncertain, their dreams of wealth and security reduced to dust. The world is watching. Will China find a way out of this crisis? Or is this just the beginning of an even greater economic disaster? One thing is certain, the road ahead will not be easy. If you found this video insightful, make sure to like, share, and subscribe. Let us know in the comments. Do you think China's housing market will recover, or is this the start of something even bigger? Stay curious, stay informed, and see you in the next video.